Good morning. It's Tuesday, February 27th, about 5:30 a.m. Central Time. All right, the precious metals are higher after yesterday's sell-off. You have April gold up $6, 20.45. You have May silver up 10 cents, 22.83. You have May copper up 1 at 3.85 and April platinum up 13 at 8.94. That's about a 1.5% bump up overnight. You also have June palladium up 8 at 9.75. So we got to get acclimated to that contract as well. A lot of these contracts had rolling over except the gold contract, which is still stuck on April. But that nice move on platinum overnight comes down to about the 883 to 878 range. That's been kind of a key level of support if you look on the chart. Tends to bounce up from there, then becomes a tug of war on either side at 900. If it can get above 900, it either lets us all down at about 912, 908, somewhere in there, or it takes off to 950. So who knows what it's going to do. It's got its own personality, and some of the fundamentals are a little bit tough here to track on that market. But looking at the housekeeping here, some of the economic data coming out, we do have durable goods orders coming out at 7:30, expecting a decline of about 6%. The consensus is down about 5%. We'll see if this has a miss here, and if it has any kind of impact on the industrial metals. I really don't think it will be. I think it's just going to be the headline number comes out at a small miss. We might see some of that risk on trade as far as interest rate cuts and things like that. They'll kind of jockey a little bit around on that CME Fed Watch tool. So, and the reason for the decline is that a large portion of it's going to reflect the decline in commercial aircraft. Remember that Boeing had issues. People weren't buying any airplanes at the point in time where the door just fell out or whatever the hell fell out the window or whatever. But yeah, you got to resolve that issue before you're going to start putting in some new orders for additional aircraft. So around 8 o'clock, we'll have some Case-Shiller housing. We'll also have some housing price indexes coming out, things like that. And then finally, at about 8:05, you'll have Federal Reserve Vice Chair for Supervision, Barr. He'll speak. He'll say that he's confident we're on a path to 2% inflation, but we need to see continued good data before we can begin the process of reducing the Fed funds rate. Then you're going to see consumer confidence at 9 o'clock, expecting 114.6, consensus 115, and then Richmond Fed Manufacturing Index showing a small decline as well. So a couple things here on the markets here. One thing I was reading, an interesting report by one of the third-party research companies that we get here, and they were talking about gold trends specifically with the miners, and they were saying that basically with gold kind of hovering and anchored right around these near all-time highs here, really it's been the pickup in central bank buying. They are kind of divesting themselves from other foreign currencies, kind of bringing it all home, buying things like gold and having that as a reserve currency rather than other foreign currencies. So that's where gold becomes kind of anchored in this rock and a hard place here, hasn't broke out to the upside, while the gold miners continue to sell off relentlessly. So if you look at the GDX year to date, down 14%, 14.10%, GDXJ 14.21%, where gold itself is only down about 2% year to date. And the reason is that the gold miners, they've had higher input costs. Okay, of course, they're the most affected by like inflation and things. Their biggest costs are always going to be like fuel, employment, insurance costs, things like that. Now all those have stabilized. Their costs of production are around $1,200 to $1,300 per ounce. The problem is, and people play this as a leverage play on gold by going long miners because they're these cheap stocks, which actually I think you have more inherent risk. What if the CEO sleeps with the secretary and news gets out and the stock gets canceled or whatever? Or you got a country goes and they nationalize the mine. I just think there's a lot of different things out there that could affect the price of a miner rather than the price of the gold. But where I'm getting at here is that the bottom line is that if you have fixed costs, say $1,200, $1,300, and gold's up here, how are you going to make more money? You need to produce more. They're not producing more. Their production levels have been stagnant. So that's where you see the divergence between the price of gold or the underlying asset, something like copper versus copper miner or whatever. That's the thing. You've got to increase your production, and because of environmentalists, they're having a tough time on ramping up that production. Now, a couple other small things here. Copper broke down yesterday. I said we would investigate that. Silver down 50 cents. And it was the Chinese equity markets that they broke this uptrend and ended up with a moderate loss. And China is one of the biggest consumers of the copper market and also the silver market. Something else here is that these markets might be in a holding pattern, things like the precious metals markets, because we're waiting for the Fed's favorite inflation data, the PCE data, coming out later this week. And then finally, Bitcoin up $2,000 overnight, $6.1 billion going into the Bitcoin ETF here. So it's put down about $1 billion a week. One other final thing here, gold, silver, platinum. People were asking me why we're going for these small amounts, kind of taking slices, $10 out on the platinum, maybe 25 to 40 cents on the silver market. It's because the markets haven't gone anywhere. They're not giving us this opportunity. You look at platinum, downside year to date, right around that 877, upside about 935, 940. So that's not much. I'm a lot to work with here, only about 45 bucks. You look at the silver market, 23.68 on the upside, downside about 22 and some change. So only about $1 or something to work with here. And then finally that gold market, 2,000 on the downside, maybe 2,060 if you're lucky on the upside, trapped between a rock and a hard place. You got to take what you can get on this. You got to sell at the upper end of the boundary, kind of try and buy at the lower end of the boundary, and you keep doing that until you get a new catalyst where you get the breakout to the upside, and then you try and ride that train like you do in the Bitcoin market right now. So you got any questions, give me a call. Love to talk to you. 312-858-7303. Remember, futures option trading does involve risk loss. May not be suitable to all investors. Good luck, good trading.